Okay, good morning, everybody. It is Tuesday, February 15th, 2022, and we're going to get started with the pre-market analysis on the S&P 500 futures market. So, let's take a look at things here. Remember, yesterday we basically kind of mapped out all the different areas in the chart, 200 points above us and 200 points below us. So, we kind of have everything kind of set for this morning. I guess we could quickly look back to yesterday and just kind of review. I'll go down to the really small time frames here. But basically, we were not trading very heavy yesterday. We came in and we had some lines in the sand above us. And I believe just out of the open, I mentioned still looked really bearish. I still was looking to sell the market. Actually got a short off. There was a prediction point right up at 13. So out of the open took that. But basically told you guys all throughout this whole area as we were chopping up and down to basically wait for a better day to trade, right? So what I do, spend all morning kind of explaining there were some setups here and there, but you want it to be hands off. As we broke lower and we actually got a new low for the day, we came down below our orange line. I did try fading it to see if we could get a deeper sell-off down into one of those deeper levels, but never happened. So got a little bit of a pullback from there. I tried to re-enter to see if it would follow through. Nothing ever happened. That was our expected support right there. And then the next area, which I was targeting for a target, was down into that 81, as you guys remember if you were in the room. And then it was just kind of weird. I took it long off 81, which I did tell you guys was our expected support level. So that would have been a decent attempt to take it long. Would have probably been one of the better trades of the morning there, right to VWAP, right to our expected resistance, right into the 200 for the pullback, right into the VWAP for the pullback, and then basically that last half hour, I didn't even think I talked very much, again because it was still sideways and choppy. It looks like eventually, towards the end of the day, they tried to rip it, and then they brought it lower. And let's just see here. I didn't even really look at the charts here at the end of the day. It looks like, yeah, just more sideways, never broke out of the daily range. And that was it. Wow. Um, what a mess, huh? Which brings us into today, and we actually did break out of that disgusting range. So that's a good thing. Hopefully we don't come back and revisit all this stuff, because again, we're going into an area where there's literally a million different levels that all are probably going to be very relevant. So let's go ahead and jump up. We'll start doing our pre-market here for today. And I do like the fact that we did get this little push out. So maybe we'll get some type of attempt by the bulls here. Let's take a look. Quarterly can't say much about, not different from yesterday. Monthly's not different from yesterday. Weekly's really not different from yesterday. I do still want to point out, and this is actually something I was watching here yesterday evening. So when I was looking at the charts last night, I was actually tempted to find a long entry because I saw we were breaking out, and I was like, shit, I should probably jump in. I would not be surprised if this little thing I said yesterday in my pre-market about the weekly showing a potential bullish divergence, what would happen if I jumped in long and over the course of 2 or 3 days we actually held that and this actually became a turn for a push back to the all-time high. That would be amazing. But I didn't find an entry and never got in. So I'm still watching this potential weekly bullish divergence. So I can't really mark it as an official signal because the candle hasn't closed. We still have 4 more days, today, tomorrow, all the way to Friday, and then even then, the next candle could open, and this could potentially continue to carry through, and we'd have to kind of reevaluate. So it's going to take time, but I'm still watching that up on the weekly there. On our daily, let's take a look here. Well, that's interesting. I think that's quite relevant to what we do here. So on the daily, we came down to 42.1275. We bounced all the way to 45.86. right into that. Again, it got through 80, so they probed through the top end of what we expected to be the resistance there. And look what happened again. And you guys are probably tired of hearing it, but I have to stress we hit the 38, right? We held it. We tried to bounce back up, couldn't get through. That right there was a very strong indication that we were going down at least to break through 46 and come down into the bottom end of that range. If not, can start for the continuation lower. So we come down, we held the 50, so we held the 30, came up, we held the 50. You can't see it super cleanly there, but we held that 4400 area, bounced out for whatever it was, just about a 20 or 30 point bounce, continued to sell off, and yesterday we made a low and bounced out of the 61.8 of this leg. So when I continually am bringing up retracements and you're getting tired of hearing it, I mean, this is just another example here over the last 4, 5, 6, 7 days of holding the 38, bouncing, holding the 50, bouncing, holding the 61, and bouncing. It doesn't really get any better than that. I mean, I guess the best thing would be they actually bounced to the tick off of each level here, but I mean, you can't really get much better than that. So we're holding the 61.8 right now of the leg. Again, just like I said up here, holding 61.8 of the push down is our first bearish clue. This is a somewhat of a bullish clue, and now we're in that scenario I told you about where you have two opposing kind of fib arguments. You have the argument that you're holding the 61.8 of the attempt to bounce out, and the argument that you're holding the 61.8 of the attempt to continue to sell off. And so we're kind of stuck within this range right here. Above 43.55 is a bullish case, assuming that they can continue to get through and get up through the 86 high. And then staying below the 86 high is a bearish case, again, expecting that test of the lows at 42. So it's kind of hard to say in here what we should be doing because there's kind of two equal arguments. They're basically equally weighted. We do have a stronger multiple time frame bearish signal up from that first test of 86 that we essentially were talking about on the morning of, while as that candle was forming. So on the morning of the second. And down here, we don't necessarily have the strongest. We do have a 4-hour, but we don't have that nice daily bullish divergence that set up the setup up here, that kind of bolstered the setup up top. So maybe there's a little bit more of an argument if you want to go that way. But I would say right now it's basically a hat toss, a coin toss here. Are the bulls going to hold the 61 and go ahead and break out to the upside? Or are the bears going to jump in here somewhere on this attempt to trek higher by the bulls and swat it back down for the continuation lower? And I don't think anybody can tell you what's really going to happen here. So that's where we're at looking at this from the daily perspective. Just keep in mind, if they do get up through the 86 highs, we still have that ledge there just around 46.06. And I think our eye level is 45.0575 or something like that. That's going to be important if they come up, and it might even be, just like so many other scenarios in the market, it might just be a push up to come into that level and then fail from there. And then we have like a 3 tests of this area and a failure. That really might end up opening up much deeper here. And people are talking about some pretty extreme retracements down below us. So again, we never know, and all we can do is just react in the moment to what the market's doing. So that's what we're getting here on the daily. And down to the 4-hour now, get into the intraday time frames, and we do have the bullish case from the lows back here. And again, I'm absolutely blown away that level that I highlighted back a week ago when we were looking at the market, and I was really like rabid about it, is the level that's still holding right now. So really good shit. And from what else can I say from the 4-hour here? We've already mapped out everything on Monday, so there's really nothing new to add. We haven't broken to new highs So there's nothing up above us that we have to reconsider, and we really haven't broken to any lower lows as of yesterday's range. So there's really not much to add here. Um, what I'm noticing on the 4 hour here, just keep this in mind coming into this morning. I don't want you to orient yourself bearish just because I'm mentioning this. I want you to just keep it in mind. The market got a nice 4 hour bullish divergence down here. We might even see that there are some lower time frames as well. There's the 60-minute. So basically from yesterday's low off the 61.8 retrace of this bounce, we do have a 4 hour and a 60-minute, and we might even have 30-minute, 10-minute, 3-minute bullish divergences from here. So we have a good multiple time frame confluence. Again, not as strong as that first test up at 86 where we actually had the daily on top of it. We don't have the daily down here, but we do have the 4 hour and probably on down. So that's a pretty strong argument for the bulls off that low. The issue here is that the bulls got their follow through from the low of just about 43.55, give or take a few. We've gotten all the way up to 44.55. So we've already got a 100 point or greater than a 100 point bounce. So I think that signal has already gotten what it needs to get. At this point, I think that's more than enough. What I'm noticing off of the current high, and this is what I was kind of setting up just a few sentences back. If that holds right there, that will be a bearish divergence on the 4 hour. So again, I don't want you to orient yourself bearish right now, but there's the potential that if this 4 hour candle closes 30 minutes after the New York Open, and it still looks the way it looks right now, there might be an argument for the bears there. So I'll be watching that just to see it. The daily doesn't have enough resolution really, and if you look at the high we're making on the daily candle right now, definitely don't see any bearishness, but I do kind of see it on the 4, so I will be watching that. Outside of that, don't really have anything to add here. Again, we have our levels. The only thing I want to do now is go down and look at some of these retracements of the current push down and see where they're all lining up. So let's go down to the 60. Again, the 60 has the agreement with the bearish signal from yesterday's low. And then when we pulled back after the morning of chop and actually got the sell-off that I would bet got a lot of bears involved, expecting that continuation to actually break through that low. We came back down and actually got another bullish divergence on that attempt. So there's two nice bullish divergences down there. Up top here, looking over to that high, we actually do have a closed. It's actually officially closed now. The 4 hour obviously still in progress, but we did get a bearish divergence on the 60. So we do have some agreement up top there. All right. So just again, I'm just watching it. I'm not saying that means we're going to continue to sell off and make new lows compared to yesterday's lows, but just keep in mind. Now, another thing, again, I told you I want to look at the actual retracement now from, we're looking at 85 down to the low here. We're sitting at the 50% retrace right now, right? We turned just maybe 3 or 4 ticks just in front of it, 2 ticks in front of it there, and we're pulling back. So just note that this little area right here, and what's cool to note, and we talked about it yesterday, is this is our shaded region from yesterday. So in our pre-market, we said that this little zone right here between 69 and 74 was going to be our expected resistance, assuming they could get through this little swing low back here at 54. I went back to my short time frame chart. We did push to 53.75, just a few ticks in front of that major swing low I mentioned, and we pulled back. But what happened was it probed through to 57, so kind of broke through the 54 low, and then did get a deeper pullback, but really not too much going on from that first little area I warned you about. It looks like this second zone ended up being a little bit more relevant right now. So those were the two levels we expected resistance from. We did get some minor resistance. There just wasn't like a 30-point pullback from it. And then we pushed up, and now we're having trouble here at the 50%. Keep in mind, the next eye level above where we are, blah, 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 blah. the next line that we have above us between where we are right now and up here is 96.75. So if we can get through here, that would be that next level I'm watching. And then there happens to be a swing low here at 45.1250. We might even have an eye level right around there. So we'll want to watch that. That 1450 level is that super relevant level going back to, I think it was a week ago, where we were having a lot of trouble getting through it throughout the week. Eventually, we pulled back from it and then bounced and broke through. So that's right there, right around 12 to 14. And this is actually highlighted from some type of analysis I must have done a while ago. Somewhere over there, and I'm trying to grab it and pull it over. Yeah, somewhere around over here. So 12 to 14. These would be the next two levels above us. We'd have those and then the 27. So just keep in mind those are what we have above us if the bulls end up holding where we are right now and going ahead to continue to chug. So that's it for the retracement down. And we could actually look at the retracement down of the more local push right there. But we've just breached through the 61. That's probably, and I'll go ahead and load it. Would not be surprised if that was just about the 70 there. So let's take a look. Yeah, the 70 almost exactly. So holding there. And I think that's enough to bring us down to the short time frames, and we can look at what we're pulling back into here. The thing that you need to keep in mind is this whole area down here, if we pull back, is a whole shitload of chop. So there's probably going to be a lot of levels that we want to kind of be aware of, but let's go ahead and jump down and take a look. So on the 30 here, looking at the retracement of the push from the yesterday's low all the way to the overnight high here, the 38 is lining up essentially with the previous daily high area, and it's like I said, it's tough here to pinpoint specific levels because there's so much stuff here. But I would venture to bet that somewhere between the orange line and the red line right there would be that first area of support. The problem is it's just about 7 points wide. So there's just a lot there. Unless you want to have a huge stop and just put your trade in at 25 in the middle of it and keep your stop all the way down, probably not going to be a specific level in here that I'm really wild about. But I wouldn't be surprised to see some type of support over in here. And to be honest with you, the actual orange line itself, 2075 there, matching up with this swing high from yesterday, just 2 or 3 ticks above it. That would be a level I would actually rely on if there actually is a good signal down there. But you know, I just think there's so much in here that it's hard to really tell you that one level is going to be more relevant than another. The 50% I will tell you is sitting up right at that overnight ledge there. So that high at 44.1075 is essentially to the tick 50% of this push. So again, I know we have an orange line at 20, we've got our eye level at 15, and now we have that ledge there at 11. So there's a whole bunch right there. And any deeper than 11, I do think opens us up right into that 98 area. And going back, I don't know if Steve's in here. Hey, yeah, Steve's in here. I do have the close from yesterday marked as that little dotted white line that I don't even know if you guys can see on your chart. It happens to be a prediction point today. So if we pull back and we can't hold the top end of this chart, this area, and we can't hold the 50% retrace, which was the major high from the overnight that we rejected from, my W's sometimes just get all screwed up. But we rejected from there in the overnight, that if we can't hold there, then that 98 is exactly the 61.8. And if you look here, this other swing high is just a few ticks above that. So that would be another area that seems relevant to me. And again, the actual close from yesterday, sometimes we do see a close of the gap would be right to the prediction point, which is just below 98. Again, there's just a shitload here, right? So it's like every 2 points, there's something super relevant. So I don't know if it makes sense to really just be buying every level, expecting a bounce. This morning, if we could get into a short, assuming the circumstances are there, the setup shows its face, we'll go ahead and get short. I'd just be taking a little bit of profit in front of some of these levels rather than trying to buy every single one because again, I think it's going to be difficult to really pinpoint what kind of sticks out to me if I just get rid of all levels and just look at the price action. What sticks out to me is that major ledge, the 50% retrace at 44.11, and then this pullback into 98. Those are the two that I like the most. Of course, anything's possible, and the most aggressive thing would be for them to either hold where we are now or come down and hold that previous daily high, that red line, and just bounce right off that ledge and go ahead and continue to go. So I wish I had a better picture for you this morning, but that's kind of all we got. I have the smaller retracement up here of the smaller part of the leg. So basically the overnight low to the overnight high, not including yesterday. And again, I mean, these levels are all kind of lining up with stuff because there are so many relevant things down here. So 15 quarter happens to be 61.8 of the smaller local leg. So maybe that ends up being a little more relevant because of that. But, I don't know, guys. There's just a whole bunch down here. So we'll just react and find our setups off our levels and see if we can't capture a little bit of this. So that's where we are. We'll see you tomorrow.